CIGMA, Coal Mining Association, to present this survey. We done the survey from, the period of the survey was from, we sent a questionnaire around late last year, and the process of the surveys was around early this year. The survey covered the year of up to 2011. We also complement the survey with the information for 2012 based on the publicly available information. The outline of the presentation is presented in the slide. We will start with the background of the survey, the participant of the survey, and the coverage of the survey, and then continue with the financial highlights and performance of the mining company up to 2011, plus the public company up to 2012. And then we will discuss about the performance of the listed mining company in the Indonesia Stock Exchange. We will see how the price of commodities impact the market cap of those companies. Another very important aspect, which is an indicator of the success of a mining industry, mining sector in the country, is about the level of the investment they receive. So in the survey, we also cover the investment aspect and then compare it to the global spending by major mining companies. We will also discuss about the key challenges being faced by the mining companies and what's the top issues considered by each of the contract of work and IUP holders. The importance of the mining company should also be reflected in the community and the government revenue, of course. So we will also discuss about the significance of mining sector in Indonesia and the contribution to the community and to the government. We also, in the survey, we also sent some questions to the respondents about their view on the future of Indonesian mining industry, what's their expectation of the development in the industry. As a background, this is the 11th annual survey of mining industry. So later on, we will provide the publication, the result of the survey. And at the back of the publication, you can see the 10-year data, 10-year information of the financial performance of the mining sector. This survey is very important, and we believe it is very valuable information for all the stakeholders, including the government, and will describe the state of the industry as a whole. Because if you see the coverage of the respondent, we cover major coal producers as well as mineral producers. So that should provide a highlight of the trend in the industry and also show the importance of the mining sector to the whole economy of Indonesia. Let's move to the highlights. When we discuss about mining sector performance, of course, we should also discuss about the price of the commodity itself. As Pak Tony mentioned before, currently, yes, we are sort of in quite an unfavorable situation where the price of coal and mineral is dropping due to the uncertainty in the Eurozone and the crisis in the US, also slow down in the economy of China and India. So this chart on the left shows us the trend of the price with the 2000 as a base year. If you see the index there, we started with 2000 as a base year there, which is this. And then we can see that from 2000 to 2003, 2004, the price is quite stable. But then it kept increasing due to the development in the economy up to 2008 when the crisis hit the economy of the major developed countries. So the price then dropped in 2008, you see there, but then it picked up again after that. And the problem is that 2011 we see very high price being enjoyed by the mining company, which is depicted in this table here. But we see that the fortune being earned, or the high price being earned, that being enjoyed by the mining company, refers back in 2012, and that's really impact the financial performance of the mining companies. This slide shows the financial highlight of the performance of the mining company. We can see that for 2011, the revenue increased by 18%. This is mainly driven by the increase in the price of commodity, as well as increase in the production, especially in coal. But this 18% increase in revenue was not translated into the EBITDA and the net profit, unfortunately. This is mainly because there's increase also in the production cost, which is far higher than the increase in the price itself. Compared to global, we also did a review, PwC Global also did a review on the top 40 global companies. And compared to global, Indonesian mining industry represent around 4 to 5% of the whole of these top 40 global companies in terms of the revenue, EBITDA, and net profit. The achievement of 1% increase in net profit in 2011 is actually quite disappointing if we see the increase in the net revenue itself, which is 18%. If we divide this achievement of 1% increase in net profit, actually coal company achieve an increment of 92%, whilst for minerals sector, there's a decrease of 33% in net profit, mainly due to lower production by mineral company at the time. That's for 2011, and moving to 2012, where we use public company information as a basis for us to analyze the performance of the industry. You can see from here is that the performance in 2012 is the opposite of the performance in 2011, whereby we see a decline in revenue by 9% from these public company, listed companies, and also even further decrease in the EBITDA and net profit. This means that despite that there's a decrease in the price, the production cost doesn't necessarily follow the decrease there. The production cost, especially fuel, has increased a lot, and a lot of mining companies just could not sustain the profit that they earned back in 2011. It is worth to be noted that from the 63% decrease in the net profit, there were some accounting adjustment made by the public company, which include the financial instrument adjustment, as well as impairment adjustment to the exploration cost. So that's not purely cash cost, but also include the accounting, the way the accounting adjustment is made to the books. The next slide shows the key ratio being earned by the mining company. We compare the key ratio between Indonesian company and those recorded by the top 40 in the global mining company. In summary, Indonesia performed better in terms of the key ratio. If you see here, the EBITDA margin, the net profit margin, Indonesia recorded a better margin compared to the global players, as well as on the return on capital employed and return on shareholder fund. It shows that Indonesia may have a cost structure that is better than the global players in general. This is, but bear in mind that in Indonesia, the whole numbers is driven by a handful, around 5 major mining companies with a very efficient operation and low cost operation, even compared to the global standard. These tables show the aggregate profit and loss comparison for 2012. We divided between coal companies and mineral companies. If you see there, there's a decrease of 1% in the coal company revenue to around 19 billion. Despite the decrease of 1%, as we discussed before, net profit declined even further to 64%. So coal company experienced a very difficult times in 2012. And then the same is experienced by the mineral companies, but they experience even bigger decline in their revenue, which is 25%. Coal company experience only 1%, mainly because they can increase the production level to offset with a lower price. While for mineral company, it's not easy for them to quickly ramp up and then increase the productions. In terms of net profit, mineral company recorded almost the same result or decline with the coal company in 2012, which is a decline by 61%. That's the highlight, and then I want to go through to the net profit and rate of returns. As we already discussed, the net profit overall of the mining company experienced an increase from 2001 to 2007, both for all mining company in aggregate as well as for the public company. But we can see there that there's a very sharp decline back in 2008 due to the crisis, which resulted in a lower price, lower coal and mineral price. But then this performance reverted back in 2009, 2010, 2011. But we see from the public company information, we see another decline in 2012, which is last year. And this trend actually continued for this year, for the first quarter 2013. What interesting we see from this chart is that despite we see the profit increase in 2009 until 2011, but the level of return on shareholder funds keep decreasing. So despite they can maintain the net profit level, but the return on shareholder fund keep decreasing. This means that for every $1 net profit earned by a mining company, they need more shareholder fund. They need more capital to generate that $1. That's a challenge for the mining company today. The next slide, we divide the performance, similar slide to the previous one, but this time we divide between coal and minerals. The same trend happened for both coal and minerals, which in 2008 we can see that all the price decreased. But for coal company, they were able to increase their net profit despite of the problem in 2008. This is mainly because they were able to ramp up the production and still enjoying an increase in the net profit. But both of the sector, both for the coal and for the mineral, we see a big drop in net profit and in shareholder returns for the period of 2012. This is based on the public information available. When we discuss about the net profit and the performance of mining company, of course, one of the drivers we already discussed before is about the price. The next is about the production. From a production point of view, we can see here that coal is the only commodity where have a continuous increase in production level. That's shown by the top line, the green line, the yellow line. Whilst the others tends to be more volatile. We can see that, for example, for copper and gold, production declined in 2011 because of the delay in the ramp up and some problem with the production in that sector. Whilst for wheat, there's a big increase in the last 2 years, 2011 and 2012. They were able to ramp up the production and increase the production level. Let's move to the market capitalization of public company. This slide shows an interesting fact. I think it's quite consistent with what we see with the price in this sector, with the minerals. This slide shows 15 listed mining companies that has a market cap of over 10 billion rupiah. So this is not all listed company, but this is only some of the company, but with the market cap of 10 billion rupiah, above 10 billion rupiah. We can see that from the period of 2010 up to now, the market cap has decreased significantly, and that could be as big as half of the market cap compared to 2010. So this shows the performance of the mining company and the expectation of the investor actually, mainly driven by the price. From the analysis, in 2010, total market cap of all mining company amounted to 55 billion rupiah. But in 2012, this market cap decreased to 31 billion. So this is in dollar. In 2012, it's decreased to 31 billion, which represents a 43% decrease in the value of the market cap. So the value has been eroded a lot. And as of March, first quarter 2013, the market cap further decreased by 4% to only 30 billion US dollar. This is compared, if we compare to the overall Indonesian stock exchange performance, this is lagging behind actually. Because if we see from these charts, the charts on the right side, the top line show the overall performance of Indonesian market, but this, the middle line show the Indonesian mining company. The other two lines we put in there is the FTSE 350 mining index and HSBC mining index. So we can see that in general, both in Indonesia and globally, public mining companies are losing the market cap, whilst the whole industry enjoying growth in Indonesia. There's a contrast, a big contrast between mining company and the other sector. Let's move to investment. As I discussed before, investment is a very important aspect of mining operations because it determines the future success of the mining industry. So we divide the investment between exploration, which is, if you see the top line there, we divide between greenfield exploration, and others is actually exploration for a project which is not greenfield, brownfield, and feasibility study. We have a total increase in total exploration in 2011 of 2%. The total investment by the industry has increased by 57% in 2011 to around 3 billion US dollar. But if we see this carefully, actually the investment is more on the development of existing mine as well as acquisition of fixed asset for the expansion. Whilst greenfield exploration, which is the lifeblood of the mining industry, future mining industry, only 97 million US dollar based on the survey. So this represents a very, very low amount of exploration, greenfield, new exploration being spent by mining company. Most of them still concentrating on the existing project and expansion of the project. So this is a big concern for the industry because without greenfield exploration, we may not have new project in the future. We just have existing project which reserve will be depleted someday. So the industry could go to the sunset era then if we don't increase the exploration in the greenfield. Further on this greenfield exploration and feasibility study, if we compare our piece from the global spending, and this is quite consistent result compared to previous survey that we launched before, Indonesia only received a very tiny or very small proportion of the exploration spending. Consistent with the Fraser Institute survey result, we have huge potential in geology, in coal and mineral resources, but yet we receive only a very small amount of exploration spending. This shows that there's some issues with the Indonesian mining industry because global players will of course compare the investment in Indonesia with other regions, and they will do their allocation based on their cash available. This means that Indonesia is not attractive enough for people to come and do greenfield explorations. I think we discussed, in the last 2 days, we discussed a lot about the Fraser Institute study, and I understand yesterday there was a separate session on this as well. The way we present here is that the size of the bubble shows the size of the spending, the exploration spending spent by the mining companies, whilst the horizontal lines, the horizontal line shows the mineral or geology potential, and the vertical line shows the policy potential index. As we can see here, a more developed country like US, Canada, they receive a huge portion of exploration in terms of dollar value, dollar amount, whilst actually those countries don't have a very good or as high as Indonesia in terms of geological potentials. But of course they have a better policy potential there. If you see Indonesia, which is this dot, we only receive around 300 million US dollar spending. We have huge potential in terms of resources, but because the policy is not supporting it, we receive very low amount of spending, which is consistent with our survey. We are even behind of Mongolia, if you see here. This is Mongolia. In our survey, we asked several questions to the survey respondents on various aspects of their operation and their expectation. The question we asked is that also include the exploration aspect and what they plan in the future. We asked a question whether they will increase their exploration activities in the next 3 years, and it's quite interesting to see the results that actually most of mining companies still very interested to further explore in Indonesia. Which we see here, the survey result, we have 83% of the respondents replying yes, that they will continue to explore. And if compared to international exploration, it's only 22%. So this shows that mining companies in Indonesia still willing or still interested to explore in Indonesia. But bear in mind, this survey respondent includes those already in production phase. And of course, when a company already in production phase, they will continue to do the exploration in Indonesia because they already have investment in sunk costs and all the big assets in Indonesia. We also asked the question, what's the expected percentage of exploration expenditure they will put in the greenfield explorations? And that's being shown in this chart. Actually, only around 38% of the fund is going to be allocated to the greenfield exploration. So it's still quite low. If you can see, yes, they're still interested to put the expenditure in Indonesia, but the exploration is mainly going to be for the project which is already running and ongoing. Whilst for a pure greenfield exploration, it's still quite low, the interest. One of the key challenges that faced by mineral producers recently is about the requirement to process the mineral in country, in Indonesia, the value add, and their export ban, the recent export ban being put by the government. The export is still possible now, but we have to pay 30% export duty, and it is expected under the rules that by next year, 2014, all the export of mineral that are not processed up to the stage that required by the government will be banned. There's a lot of talk in this area whether the government will defer the implementation of these rules because it's only like half year away, but we haven't seen a lot of realization in the smelter for the investment. So this is still a quite challenging situation. But when we ask the respondent that whether these in-country processing requirements will impact their exploration activities in Indonesia, it's quite interesting to see that most of them, or 69%, answered that it should not impact their exploration program in Indonesia. But again, as we discussed before, some of these respondents is already well established in Indonesia, major mining companies in Indonesia, and they're already doing their activities in Indonesia. That could drive the result of this survey. The next question is about, given the current price environment, where the industry will concentrate in spending their fund, in allocating their fund. We see that 45% of the respondents respond that they will acquire the reserve and allocate the fund to it. 25%, one quarter, responded that they will use the fund for the return to shareholder, and the rest will be allocated to capital spending. In respect of perception about the mining sector, we also asked about, from the company total expenditures, what's the proportion of the allocation between exploration and development of fixed asset. Not surprisingly, 73% answered that they will allocate most of the fund to the development of fixed asset spending. So again, this emphasizes the message that exploration is still receiving a low proportion from the total expenditure. And then we also ask the question, in terms of the capital needs, whether it will increase going forward, remain the same, or it will decrease. We received an answer that 61% of the respondents will increase their expenditure in Indonesia. And this will be mainly being funded by the bank loans, third-party bank loans, rather than a shareholder fund. I think this is quite reasonable response because given the current interest rate from the third-party loan is quite low, so most people will finance their project through the bank loan. Let's move to the key challenges facing the industry. We asked the question, we have a list of the issues being faced by the mining companies and asked the respondent to put a rank on the key issues they are dealing with on a daily basis. The slide shows the list, the rank of the challenges. Quite interestingly, if we divide the respondent by contract of work versus IUP, or if we divide between coal mining and mineral mining, we still have almost the same response on the top 5 key issues impacting the industry. The first one is about the lack of coordination between the central and provincial government. Second one is about the conflict between mining operation and forestry. So the izin pinjam pakai is quite a big issue for mining operations in Indonesia. And then about the confusion surrounding the implementing regulation for the mining law. Next is about the local government relations. So across the board, this is the top 4 issues that appears if we divide by coal and minerals, if we divide by contract of work and IUPs, which is quite consistent. What's interesting from this survey is that the divestment rules is not on the top of the list. Whilst we know when the government changed the divestment rules from 20% to 51% in the 10 years of operations, there's a lot of reaction from foreign investors, negative reaction from foreign investors. But what's interesting here is that it's not being put as a top concern by the mining company. Another one which is quite interesting is also about difficulties in implementing the in-country processing requirement. Some of you may already involved in various discussions amongst the government agencies about this in-country processing requirements and how difficult it is to implement these requirements. But it appears that the survey respondents don't see this as a major issue. But if we divide between contract of work and IUP have bigger concern, of course, compared to contract of work, because generally, contract of work company will be required to process the product anyway. We also asked the participants of the survey to provide an insight about what's their view on the impact of the 17 issues on the investment. I do apologize because this is quite small, but probably what we can get from here is that this is the no impact, moderate impact, and then this is a significant impact on the top. We can see that most of the respondents, they feel that all the 17 key challenges moderately impact the industry, the attractiveness of the industry, the investment in Indonesia, which is of course then a concern for all of us, should be including the government, of course, that we in Indonesia, we still have quite a lot of problem in this sector. The top there is actually forestry. This is the second bar. Forestry is a big issue, and then followed by the land acquisition, another big issue. Next slide shows the likely development. How convinced the investor, how convinced the sector about the improvement in the industry. The first bar, if you see, this is the 17 issues. The first bar shows in the next 1 year, so short-term period. and then the next bar shows between 1 to 5 years. If we see from the result, there's less optimism about the development or improvement of all these issues in the short term. But people tend to have more optimism for a longer run for the whole industry. That's the key message in summary. Okay, as we discussed before, contribution to economy, mining industry in Indonesia continue to be a very important sector. And this slide show you what the statistic there. So, in terms of regional and community development, the industry spent around 2.5 trillion rupiah for the community development and donation. Of course, if you compare to the whole Indonesia, probably this amount is not that big, but for certain region where the company operate, this is a very huge amount in terms of donation and then community development. The direct employee increased by 9% in 2011, up to around 48,000 workforce. But what's interesting from here is that whilst the number of employees increased by 9%, we can see here that the compensation received by the employee increased by 25%. Bear in mind this is 2011, when the price is very good, still very good. This means that on average, the workforce receive more benefit, more compensation from the mining company, because the increase is far higher than the increase in the headcount. It will be interesting to see what happened with 2012 and 13 with the current price condition. We also put there the government revenue. In total, the government revenue from the mining sector is around 6.7 billion in 2011, and that represents an increase of 15% from 2010. It's quite a significant increase. And then, in terms of percentage of GDP, quite consistent with last year, still hovering around 5 to 6%. And in terms of the total value of the total export, mining products represent around 17% of total Indonesian export, which is quite significant. Then we believe that if we see the number, even with the current condition, even with the current investment level, the mining industry already very significant for Indonesia. And we can imagine if the industry can grow further and grow further significantly with the right investment climate, all this number will increase for the benefit of Indonesia. And bear in mind, this number is only from the mining company, the respondent. Surrounding the mining company, we have the mining contractors, we have all the vendors involved in the mining operations. So the multiplier effect is even bigger compared to what we presented in this video. We asked the mining respondent, about the survey respondent, about their expectation for the next fiscal year, which is 2012 and beyond, about their contribution to the government. So the first bar shows the income tax, second bar shows the royalty payment. Then, if we see that majority of the respondents expect a decrease, this is a decrease in the payment to the government, mainly because of the decrease in the price of minerals. So we'll see that the government revenue will decrease in 2012 and 2013 due to the lower price. And this two bar is very important. Why? Because income tax and royalty represent over 80% of total government revenue from the mining sector. Yeah. The actual result announced by the ESDM is that royalty for 2012 decreased compared to 2011 by 14%. Unfortunately, the income tax information is not yet available, but we will expect the same trend to happen, although from the budget perspective, the government expects an increase actually, because the budget was prepared back in 2011, when the price is still very high, and there's still a lot of optimism there. So we can see that there's a big swing in terms of government revenue if the price declines following the price trend. In respect of level of employment, the respondent feel that in general, for the overall Indonesia, the employment will decrease by 65%. But what interesting is that in their company, they say that they will retain the same level of employee. The respondent, 47 of the respondents say they will retain the same level of employee. Only a small proportion say that they will decrease the workforce. It shows that whilst they are facing current difficult situation with a low price, mining company tends to keep the workforce in anticipation for the next upturn in the market, in the price. Because as soon as you lost the workforce, it will be quite difficult to find a replacement when the price pick up and when the production pick up. We also asked the question, which is this diagram, whether the survey respondent, they believe that we in Indonesia, we have sufficient trained or skilled workforce to accommodate the mining industry. And it's quite a relief to see that 74% of the respondents say yes, that we in Indonesia, we have enough sufficient skilled workforce in the mining industry. So they don't see big difficulties for the talent or for the workforce resources in the industry. Outlook. We discussed and asked the respondent about the competitiveness feature of the Indonesian mining industry. And here we put various factors for the consideration, and consistent with the Fraser survey result that the resources, the geological potential is highly competitive. So this is not competitive, neutral, and then highly competitive. So still consistent with the Fraser result, is very competitive about the mineral potential. They believe, the respondent believe, there's still quite a significant untapped resources, mineral and coal resources in Indonesia that needs to be explored further. Whilst the other factors like workforce, political environment, environmental rules is quite neutral. The other, including the fiscal regime, is not competitive. The fiscal regime, the infrastructure, especially in the remote area, regulatory framework, dispute resolution, and then license process or license approval, including the forestry approval. That's hampering the level of investment in Indonesia. We also asked, okay, it's not very good picture about the Indonesian mining industry, but what's the expectation going forward? So quite consistent with the previous slide. This is sort of the expectation. In a short-term period, they don't see there'll be a lot of improvement in terms of the competitiveness of the industry, mainly probably because of the upcoming 2014 election. But in longer run, in general, people have more faith that all this area will improve. We also asked various questions to the respondent this year. For example, one of the questions we asked about the various arrests by the KPK, the corruption body, the corruption watch body, whether it positively impact the perception of the investor on the mining industry. And the answer is yes. So this is quite a promising sign. Although I know, some of you probably see still a lot of problem in terms of dealing with this in certain region. We also asked these mining companies whether they ever consider leaving Indonesia. And again, the result is quite a relieving result. 77% says that they never consider to leave Indonesia. They will skip the operation and stay in Indonesia. One of the indicators of how well the mining industry is being marketed, quote unquote, is based on the question on, do they think that the new investor who never been in Indonesia, whether they are aware about the issues surrounding the mining industry. And looks like most of the respondents, or 74% of the respondents, they believe that the new investor, most of them knows what's the issues, key issues surrounding or challenges surrounding Indonesian mining sector. This is a good sign because then this means that investors are actually still interested on Indonesia. They still want to know what's happening in Indonesia, they're still monitoring what's happening in Indonesia, and I believe they're ready to invest in Indonesia. Another question is about the level of their satisfaction on the return they got for their investment in Indonesia. And the answer is that over half of them says that they don't have enough return from their investment in Indonesia. But around 1/3 responded yes, they are satisfied with the level of return they earn from Indonesian operations. Next question we asked is about whether they anticipate, in general, they anticipate significant improvement in the mining industry over the next 5 to 10 years. This is even more a longer term, 5 to 10 years. It's quite positive. 65% answer that they still believe that there'll be improvement in the sector in the next 5 to 10 years. And then the next question, which is quite contradictory to this answer here, is that whether they think that Indonesia is becoming less and less attractive now for mining investors. And that's been shown in this chart actually. And 64% of the respondents say yes. Indonesia is becoming less and less attractive for the investor to operate in Indonesia here. And this is actually consistent with the recent Fraser report, which placed Indonesia at the bottom of all the countries being surveyed. So that's the last slide of the content of the survey results. I do hope that you find that the information useful, and then this can be used to strengthen the message to all the stakeholders, including the government. A more detailed survey result can be found in the publication, which you will get later on today. As a conclusion, I want to wrap up this presentation. The first is about the Indonesian mining industry. We experienced a very good year in 2011, but this situation reversed back in 2012. We are back to a situation where we have a very challenging because the operation because the price is low. And then the condition in the mining industry will remain challenging, especially with the current low commodity price and continuing global economic difficulties. And then the mining industry will still and remain to be very important sector for Indonesia. We represent 5 to 6% of GDP, country GDP, and around 17% of export. So this is a sector where the government will need to focus on and to improve the investment climate. And there are also continued interest in exploring Indonesia, if we see from the survey result. Mining companies still interested in Indonesia, still on the radar screen. But of course, investors will need more certainty in terms of from the regulatory framework, and they will also need a fair share of the return. If we talking about global mining house, mining player, they have many projects in other countries as well. So actually Indonesia is competing with other countries, other projects, and this fair level of return to be earned by the investor, of course they will compare with the other projects. If the return on the other project offshore is better than Indonesia, then with limited funds, they have to choose, they have to pick which investment they want to make in which country. So to be able to compete with this, Indonesia needs to have a competitive regime, both from regulatory perspective and fiscal perspective. And then from the survey, we can conclude that the investment condition in Indonesia is getting worse, mainly driven by the uncertainty in the regulatory. Since the issue of new mining law back in 2009, there are various implementing regulations which are supposed to clarify the intention of the mining law. But then we have some implementation which put more question rather than answer to the implementation of the mining law. last but not least, is a message where the future of Indonesian mining will of course depend on the global economy, depend on the price of commodity. When the price is good, everyone will invest, everyone will expand. But of course, this investment decision will also depend on the ability of the government, and to a certain extent, we as a stakeholder in the mining industry to improve the investment climate in Indonesia. So that's the conclusion of the presentation today. I thank you for your